Yeah, so just like we're not through with ransomware, we are not through with getting notifications about everything from when you can go pick up your dog at the vet to when you can go into your dentist. I mean, there are notifications galore. It used to be Uber, Lyft, and airlines, and that was what Twilio was the backbone of all of that communication to clients. And now it's just everything. And that's a mushrooming category. And in terms of software, they're at the lead, and we think the stock is fantastic, even though it's gone up a ton, then it came down, and now it's going on a run again. I'd like to say that apropos of what the stocks are doing that are in this sort of fast growth part of the market that took a big hit from mid-February until recently. I think that because the Fed's message was relatively benign, that investors who had been shying away from these stocks because of the fear of inflation and higher interest rates, which means you have to use a higher discount rate when you do a valuation of what this stock is worth that isn't going to earn money for a few years, they feel relieved. And just as investors came back to the large cap growth technology social media companies, they've now felt able to go back and take a little bit more of a bite of risk and increase their risk appetite. And you're seeing that with, all of the cloud companies, Cloudflare, CrowdStrike, Twilio, Peloton, another name we own, they're all up today. The Nasdaq is down 0.5%. The Dow is down, 1.1. So that I think is what's going on. But we like Twilio very much here.
I get it. I'm looking at another one. Adobe's up 2%. Shannon's actually going to weigh in on that one, too, following their quarter. That's coming up. But, Pete, you have unusual activity right now, right?
Yeah, I'll give you a couple of quickies. We got two hits on both these two different stocks. So Freeport-McMoRan was a $44 stock at the beginning of June. Now it's trading just beneath 35, and we saw some huge activity in there, Scott. They bought 4,500 of the July 38 calls. Those are going for about 83 cents. They also bought 9,000 of the August 41 calls for a little over $1. So two very large trades going in after this for looking for some sort of a bounce. But they're buying a little bit of time. They're going out to July and August. Same thing is true when we're looking over at Micron. Stock was trading right around 77. It's a little bit lower than that now. And they bought 5,000 of the September 95 calls. They also bought another 3,000 of the August 95 calls. So aggressive buying in both cases, to hitting twice in both cases. And a real quick update, we had some U.S. Steel buying. They were going out to August 35 strike calls. They were buying those calls. Those have gotten cut in half with this pullback in the stock. I think you got to get rid of these calls. I have my own sort of a system that I go with. When it drops by 50%, when it's something over $1, I'm out. So I'm about to be out of these calls probably before the end of the show.
All right. Love it. Good stuff, Pete. Thank you.